Hello guys, Aldous FX here. So we guys, there is this GBPNZD. This is GBPNZD, and then there is something that caught my attention on this GBPNZD, and I was so interested in trying to figure out what could possibly happen in this one. So let's just go about it, and then I will get to show you exactly what got me interested into this chart. So this is GBPNZD on a daily time frame. This is GBPNZD on a daily time frame. So if you're looking at this chart right here, to me it looks like a bullish structure. This is an uptrend structure for me, of which, like, if I can take this, even if I can start it, maybe where should I use this? I think I should use this as a high, and then use this as a low, and then use this as a high, and then use this as a low right here. So currently the market, to me, it looks like it is in an impulsive phase. If you can have a look at this, I think I have something that looks like this. Okay, let me mark this as well. So to me, this looks like a very impulsive phase. Impulsive, this being a correction, this being an impulsive, this being a correction, and then this being currently in an impulsive phase. So currently, which means we are dealing with a structure which of an uptrend, which is going all the way up. So what I did on this one was very simple, guys. Very simple. I tried by all means to keep my stuff very simple. So this, if this it's being an impulsive, therefore, which means this part, if this whole move right here was being an impulsive, therefore, which means this whole part of the graph was being the what, was being the correction of this move, so that now the move can start going all the way up. So on a daily time frame, that, okay, let's see on a weekly time frame, maybe it can make more sense if I can explain it on a weekly time frame. Just this part of the graph, if I can explain it maybe on a weekly time frame, it can even make more sense. Exactly, as you can see, maybe in this weekly time frame it makes even more sense to say impulsive correction, and then the market currently, it can be in an impulsive phase to push towards the upside. Okay, so maybe in a weekly time frame it can make more sense, but it's gonna be up to you guys on how you prefer to look at this. But on a daily time frame, it's also showing the very same thing. So this being the correction phase of the market, this being the correction phase of the market from that high to this low, you can look at this structure right here. What does this structure means? Always remember that you must respect the structure of the current time frame. Okay, so from this time frame we can see what the market gave us a low right here, and then it gave us this lower high right here, and then it came, created the what, the lower low, because it broke below this point right here. So what were we expecting to see? We're expecting to see that the market, it comes, creates another lower high, and then it goes all the way towards the downside, which is going to create another lower low. Even this point is still accepted because it was not yet broken above this high right here. It was still above, it was still acceptable to say the market can come, give maybe this double top right here, but still continue to go all the way towards the downside, because the D is as a downtrend. So in a downtrend, we don't want to see the market breaking above the higher lows. We want to see the market creating the lower lows, but in this case the market decided to do what? It decided not to break below this previous low right here, but instead it created what? It created an impulsive move which broke above this previous high right here. So when the market breaks above this previous high, like, guys, look, I always try to explain it by drawing this thing, that if you have a structure which looks like this, and then when the market decides to break above this previous high of this downtrend, therefore, which means the market has got a highly potential or highly possibility of reaching its previous high. Like, if this is the previous high right here, this market has got like highly potential to reach that same high. That's what we call a 90% rule. Okay, so as you can see that now the market has broken above this previous high, ne? but now it has not yet reached the what the previous high. So there is highly possibility to say the market is going to do what is going to reach the previous high. That is very, very, very important. So in this case right now, we want the market to reach the what the previous high. That's what we want to see, the market reaching the what the previous high. So we're just going to go to a lower time frame, just try to figure out that how can we enter this trade so that we can be able to go all the way up. So if this was a lower low, lower high, lower low, therefore which means there's no need for us to be concentrating on the what on the history too much of this graph, but we were just taking the what the reference. So which means this downtrend has come to an end because the market has broken above this this high. So which means now we are going to concentrate on what on the uptrend structure now, because that's where our main interest is. We want to go up with the structure to go towards the downside. So as you can see with now, the current new structure is what it's an uptrend. The current new structure is what it's an uptrend, creating this high, creating this low. This is a high, this is what is a higher low, this is a what is a higher high. Therefore potentially the market still be shooting all the way up. That's what we are interested in currently. So the market will be looking this way. So if this was a high, this was a low, even if you can look at this zone right here, it's such a very nice beautiful zone that we can make use of. It's such a beautiful nice zone that we can make use of. Ukuthi came market came to this zone right here. The market got rejected from this point. As you can see, we had multiple rejection, like 3 of them. As you can see here, the market tried to break above this zone 3 times and then it all failed. And then it also came with the second for the 4th time, tried to break above that zone, it failed. And then the market did it, but it did break above and then retested it again, it got pushed to the upside. So there is a highly possibility, as you can see, with the market is starting to reject from this zone. But no, there is a highly possibility to say the market can actually push and go all the way toward the upside. Okay, so you see, so we're going to use this kind of information or this kind of confluences to say we think the market is going to go toward the upside. So let's just concentrate on this last part of the graph. As you can see, impulsive correction, impulsive. So let's just concentrate on this last part of the graph. We can even go to 4-hour time frame just to concentrate on this last part of the graph. Okay, so if you concentrate on this last part of the graph, we can have this structure as an uptrend. We can still see what this is an uptrend structure. So after the market created this low, it went all the way up to create this high right here. Okay, so the market created this high from here and then it came to create this low right here. So we have this as an impulsive move and then we have this whole thing right here as the correction phase. So this we were gonna regard this as the what? As the correction phase. This whole thing right here, it's going to be our correction phase. Ne? So but within, remember, once the market gives you some sort of like a push like this to be giving you a correction, if we know for sure that we are in an uptrend, the market is going to give you something like, okay, usually I tell people that when the market moves, it's going to give you some sort of like an impulsive move and then it's gonna give you some sort of like a correction and then shoot up. There's like different kinds of correction phase that the market usually do give you. So I'm gonna give you all of them. Sometimes the market gives you an impulsive move and then it corrects like this. And then it corrects like this and then it shoots all the way up again. And then the second one, the market can give you an impulsive move and then the market corrects in a form of a ranging market like this, whereby if it breaks above this zone right here, we still shoot to the upside. And then the third one being an impulsive and then the market corrects in a channel which it is kind of going up like this and then still shoot to the upside. So you have to familiarize yourself with this kind of continuation pattern. Sometimes this one can be a little bit confusing because most people, when they see something like this, they be like, this is a reversal pattern. If you don't understand the structure of the higher time frame, you might think this is a reversal pattern. But again, this can be a reversal pattern if you do understand the market structure at which you are dealing with. Yeah, what, like if this thing was to happen in a market which looks like this: impulsive correction, impulsive correction, impulsive, and then this thing happens somewhere right here, it can be a reversal pattern for to retest this correction before it shoots up. Do you get what I'm saying? But again, the very same pattern like this, it can happen on a while the market is still giving an impulsive correction, impulsive correction, impulsive correction, and then maybe it gives you some sort of like an impulsive, then you know what this, it's going to act as more like a continuation pattern, because what, the market has just created the low and then now it's pushing your direction where you want to see the market going. Therefore it can be what, the continuation pattern. So it's a matter of understanding the bigger time frame structure so that you can make use of your continuation patterns in a way. Okay, so you don't have to cram this, you just have to understand it, guys. Okay, so I will try by all means to make you understand this thing if you are interested in learning, guys, because it all starts by you being interested in learning. So what I was trying to explain by that is that the market gave you some sort of like a continuation pattern, which is this one right here. So if you understood what we are in an impulsive phase, then this being the correction, you would have understand what, okay, the market now is about to shoot and go all the way up. As you can see, it did right here. So from now, from that point right there, where is that eraser? Right here. So as you can see, from this lowest point right here, the market came and created this high right here. So the market created this high right here. So we have this impulsive move. And then what is happening currently? The market is giving us this correction right here. So currently, which means the market is in a correction phase of this impulsive phase. So which means currently the market is in the correction of this impulsive phase. Sometimes you can even use the Fibonacci just to check if the market it's in the golden zone. As you can see right here, Oguti, the market, it is in a correction phase right here, right here. So we have this structure, as you can see, this being the impulsive and this being the correction phase of the market. Okay, so you can see right here, and then this being the golden zone, and you can see with the market, it's currently rejecting this structure right here. So what you need to do now is to find the reversal pattern of this correction phase, because either way this market has to shoot and go all the way towards the upside. It has turned, this another confirmation to say, okay, this was a golden zone, the market has turned on it. Yes, we can count that, but again, we need to be careful, guys. We need to be careful on the entry of this one, because the market, when it's giving you a break of structure to the downside, as you can see, it broke the structure, it's gonna go give a correction, and then when it breaks above this thing, you're gonna give another correction, and then it's break. So as you can see with the market, it's in a form like this. The previous move, it created the lower low, so there's a highly possibility to say the market can go to the downside. But again, you have to look at how is this thing going. So to me, this thing, the way it is, it's kind of like trying to give me some sort of like a continuation pattern to say we're gonna be going up to break above this point, and then maybe it can go to the upside. I'm just gonna show you the more you go to a lower time frame. Why am I saying that? Yeah, well, because when you're looking at this, it's a bit tricky, because if you see this, if you look at this, you would see what you have: this lower low, lower high, lower low. We are expecting to see another lower low, lower high. Do you get what I'm saying? There's highly possibility that something like this can happen. But remember, this was the golden zone. This is where we want to see the market breaking, failing to break below so that it can go all the way up. That's what we want to see. But in a way, in kind of way, if you can go maybe to our time frame, we kind of see something which looks more like head and shoulder kind of thing, something like this. Even this zone right here, you can see the market has one rejection right here. You can see this rejection right here. And then maybe there is a highly possibility to say now it is about time the market is going to reject the very same zone and go all the way up to that zone, because once the market does something like this, sometime most of the time, let me put it that way, most of the time when the market gives you a rejection like that, it also gives you sort of like um some sort of like the same push. If the market got rejected here and to this much, there's highly possibility it can be rejected that much again. You get what I'm saying? So yeah, that's what we can expect to see there. But now let's go slightly to a lower time frame just to study this downward movement and see what chances of entering this trade. How can we enter this trade? Yeah, because the right way it's when the market breaks above this zone right here. That is the right way to enter this trade, because now you're gonna be expecting what? You're gonna be expecting the market to do what? To retest this zone and then we go all the way up. So that is actually the right zone. But now I see a very risk entry that we can make use of, enter with it. We can make this okay, or we can do it this way, but it's a risk entry as yet. The correct entry is this one. The correct entry is this one. This is the correct entry. When the market breaks and closes above right there, it's a correct entry. And then I'm going to show you two risk entries. Two risk entries is going to be when the market creates this low, because you're going to be starting from this point right here. This is the lower low. We know that the market has to make a turn right here and go all the way up, but it is not yet confirmed that the market is reversing now, because it has not yet broken above the previous high. The moment it breaks above the previous high, that's when you can even increase your lot sizes and be like, okay, now we are entering full margin to be going all the way towards the upside. But for now, it's that entry that which is not yet confirmed. So we can start from this point and say high, higher low, expecting to see the higher high, and then the market to be retesting this, um, to be retesting maybe this previous high, which is this one right here. And then we can also have an entry on that one as a risk entry to that point, being it like this. I want a high, low, and then we enter with it going all the way up. Or you can even enter currently as we speak, because why? Because we have this impulsive move, this being some sort of like a continuation pattern. But I think the best way is to wait for the market to break above this high right here so that you can enter there. That's where you need to enter there, because market might become to retest this so that you can enter. Let me see. Come retest this and push all the way to the upside. So I feel like the market, when it breaks above, when it comes to close above this high right here, we can actually try to enter this one. But remember guys, this is going to be a risk entry. If you have that spare amount like in your account, like to take this risk entry, just enter this trade. I think it's going to play out. There's a highly possibility it's going to play out this trade, guys, because I feel like the market needs to go up. Yeah, but again, it's a risky entry, because the most confirmed entry to say the market is going up. Because why am I saying it's a risk entry? These ones that I just gave you, because the market has not yet broken above the previous high. So the only thing you would confirm for sure is when the market breaks above the previous high. Then you can see now we are entering to be going all the way up, because it's very risky to be taking a trade which looks like this: lower low, lower high, lower low, and then instead the market of creating lower low and go down, when now you say the market is gonna go up, it is very risky. So just wait and see. But if you're a risk taker like me, I think